Okay, that's the thumbnail. So, if you guys want to learn how to trade options, purchase my ebook located at worley41.gumroad.com. Link will be in the description below or in my bio. And if you sign up with my Webull link located in the description below and deposit $100 or more into your account, Webull will give you 20 free fractional shares. All links will be in the description or in my bio. So, right now, today, right, the position. Well, actually, let's start this way. So, the position on Friday, the SPY trade, was down 19.47% on Friday. On Monday, it was down 24.86%. Yesterday, the position was down 27.71%. And then today, the position is down 23.48%. So, we're basically down $3,268 just holding on to these SPY options, call options specifically. And basically the game plan is step 1, try to buy SPY when it's oversold. Step 2, sell out the position for a 5 or 10% gain. And then step 3 is just to rinse and repeat this cycle over and over again. I haven't mentioned really, but I've talked about that. Usually when when you buy SPY when it's oversold, usually it tends to respect the moving averages, and they'll use those moving averages that are on the daily or weekly chart and bounce off of those moving averages and retrace to the upside eventually. It won't be the next day or next couple of days. It might take, but sometimes it actually does take a couple of days actually to retrace going back up. So for example, let's look at SPY on the daily chart. So let's say you bought a couple, call options here on the daily chart, right? As soon as it broke the 9-day moving average and landed on the 20-day moving average, right? So if you would have bought, call options on the 20-day moving average on this daily candle that says January 27, 2025, and you sold the next day, you would be up, by a lot, regarding whatever your percentage goal is to exit out at. So basically for me, my exit goal of my percentage to reach is at least 5 or 10%. Usually if I'm feeling really confident in a trade, right? Specifically SPY, I'll try to trade, I'll try to exit out the position for maybe a 15 or 20% gain. I don't try to aim for higher percentage gains, because usually that's only like, I guess you could say that's more like if you're trying to gamble your profits away, go ahead by all means. But I feel like if you have like a specific percentage gain that you want to accomplish or reach, that's the percentage gain that you should reach for. Don't try to reach for a unachievable percentage gain, and then when it doesn't present itself, you're basically either stuck with a small loss or a big loss when it's time to exit out your position. So try to plan out your percentage goals when you want to sell out your position. Don't try to aim for high percentage exit. What am I even trying to say? Try to aim for small percentage gains. Don't try to aim for large percentage gains. It's kind of unachievable in a way, to be honest. I feel like that's just pure luck if you're doing that. I feel like if you're just trying to hope for the best and keep hoping that it goes higher and higher, then you're just asking for trouble in the market, and you're basically just gambling at that point if you're just hoping for the best, for higher gains or higher payouts when you're in a position, and hope for the best. So honestly, you can see that right here, right on the SPY chart, if you bought on the 20-day moving average and waited the next day to sell out, you would have been in the green. And let's say you bought a couple of call options here as soon as it landed on the 20-day moving average on February 3rd, and let's say you didn't even sell out the next day. Let's say you sold out here on February 5th, you would have been in the green. Then right here, this candle right here, this one right here, this candle, let's say you got in this candle February 12th, as soon as it landed on the 50-day moving average and you sold the next day, you would have been in the green. So basically what I'm seeing is that usually it tends to respect the moving averages on the daily chart. And basically what you're trying to do is you're basically trying to buy call options once you see the opportunity. So for example, right here, if you bought call options here on the, let's say on the 50-day moving average, obviously you wouldn't see a gain the next day. That is if you bought at the very low, right, exactly on the 50-day moving average, and sold at the high of 602 of open or the high of 603, you would see a gain, honestly. So yeah, you would see a gain. But let's say you want to see those, big gains of, I don't know, maybe 15-20% gains. Maybe you would want to wait until it reaches maybe 605, 606 maybe. But basically you can see that if you bought here at the 50-day moving average, you would see a small gain, not a big gain really, if you sold out at the high of 603. Now what's going on right now is basically the SPY is having trouble breaking that 50-day moving average on the daily chart. So me, honestly, I feel like within 30 days, from what I've observed, is that within 30 days, SPY usually tends to rebound from, after it's falling a couple days, right? Usually it tends to rebound within 30 days or less sometimes. So you can see, what I've talked about, right? Here it rebounded, then here it rebounded, then here it rebounded, and then here it rebounded slightly, not all the way, right, to previous all-time highs, but it's slightly rebounded to 603. So if you bought at 599 and sold at 603, you made it out your position with a small win. And so basically you're taking advantage of SPY when it's oversold. So let's say you bought, I don't know, let's say you bought SPY here on the 9-day moving average, January 7th, right? And then it starts going down more and more. My next option that I would buy SPY at is basically I would buy when SPY approaches 580. Once SPY approaches 580, I'm done buying, SPY call options, because I know that within 30 days, what's going to happen? SPY is going to rebound. You can see that obviously here. If you, let's say you just buy here, right? This, a couple call options here on January 7th and just waited for SPY to rebound within 30 days. So 1, 2, 3, 4, 5, 6, 7, 8, less than 30 days. Basically, it took almost 9 or 10 days for SPY to rebound and exit out your position for a big gain. So honestly, what you're trying to do is you're trying to take advantage when SPY is oversold. Once you take advantage of SPY, SPY when it's oversold, you're buying call options for, that expire in 30 days or more, whatever you like, whatever you like, right? And then try to sell out your position for a reasonably percentage gain. So if your percentage goal is reaching a 10% gain, sell out for a 10% gain. If your percentage goal is reaching 20% gain, sell out for a 20% gain, and etc. Right? For me personally, I feel like, if I can sell out consistently each time at a 5 or 10% gain or more, if I'm feeling confident in the trade, then I can repeat this process over and over and over again until I finally master this skill in a way, sort of, right? So that is pretty much to this strategy. Hopefully you guys see where I'm coming from. So basically, I'm not really worried if the trade is down $3,268 because I know that within 30 days or more, within 30 days or less, usually SPY tends to rebound almost, I would say 8 times out of 10 it tends to rebound. I just showed you on the chart, and you can see that it, sometimes it'll just rebound within 2 days or less, or within that, the next day it'll, rebound. So that is pretty much it. I'll see you guys in the next video. If you guys want to learn how to trade options, purchase my ebook located at worldly41.gumroad.com. The link will be in the description below or in my bio. If you sign up with my Webull link, Webull will give you 20 free fractional shares once you deposit $100 or more into your account. All links will be in the description or in my bio. So that's pretty much it. I'll see you guys in the next video. As always, take care. And this is not financial advice. As always, take care. Bye.